They are good. The 4-hour 50 MA. That's the level, guys. That's the level. Look at this, okay? This is what we were talking in yesterday's video. 4-hour 50 MA. It's our main support at the moment, the key and most important level in the chart, because if we break this level and test it as resistance for 2 candles, then it's very likely that we start to drop all the way towards 50k. Alright, so right now, that's what I'm looking at. All I'm looking at is the 4-hour 50 MA. And it's true that yesterday we were left without a trade. I was telling you guys that for me to enter a short, I would like to see then 2 candlesticks closing and testing a resistance, the 4-hour 50 MA. That is not the case, because, and I explained this very carefully yesterday, because this candlestick is true that it closed below the 4-hour 50 MA, but I was telling you that I would like to see this candlestick and the next one closing below the 4-hour 50 MA and testing it as resistance. Because if that was the case, then that would mean that the next candlestick would have a lot of risk to the downside. Now you can see how instead of doing that, we actually recover the 4-hour 50 MA, tested it as support, and then you have that candle to the upside. Now again, down, testing it as support. So it's kind of a game of what is going to happen with this level. Are we going to keep testing it as support? Because if that's the case, you can see that the 4-hour 50 MA keeps going up, okay? And that could be at the end a very strong support along with the range lows that could push price back up to the range highs, or even again towards this level here, 53,000, okay? That's a possibility. But the other possibility, and that is to me the safest trade, would be what I explained yesterday. It can still happen, right? Drop below this level, tested a resistance, and I told you yesterday, 2 candlesticks, please. 2 candlesticks testing it as resistance. 1, 2. Then the third one, it has a lot of risk to the downside. Maybe it doesn't happen in the third one, maybe it happens in the fourth one. But from the third one, the risk to the downside is much higher. Alright, and then we can see this. So that's what I'm looking at. I'm looking at the 4-hour 50 MA. Are we going to drop below it? Are we going to go above it? But when you see price action that it's a bit choppy like this, look, you can see a lot of wicks like this, okay? We're seeing loads of wicks, loads of fake outs. Look at this. You lose the 4-hour 50 MA, you recover it. You have to be very careful. And that's what I was telling you yesterday. Don't enter short yet. Only enter a short if you see confirmation. Confirmation is 2 candlesticks testing it as resistance. Alright? You didn't test the resistance here, not even once, because this candlestick lost a level and the next one didn't test the resistance. It went at the end above it, okay? And then the next one tested a support. But you need a confirmation. And here you have an example, okay? This is the work that I'm doing. This is Henry. Henry's telling me, thankfully I saw your video yesterday, was convinced to short, but your video basically asked me to be more patient and wait for 2 candles below the EMA. And invalidated my short entry. So that's what I mean, okay? It's not only about taking the right trades, it's also about not taking the wrong trades. Capital preservation, and you've probably heard this many times, and perhaps it's not something that you really take into consideration because you are only thinking about making money, and that's fine. But what's the point of making money then you lose it? You have to make money at the same time as you are keeping it safe, okay? That's when I come to the chart, I only look for high probability trades. This was not a high probability trade. A high probability trade is closing below this level and then 2 candlesticks testing it as resistance. That is to me a high probability trade, because the chances for price to drop towards this liquidity pool or 50,000, yesterday at the end we said that 50,000 better than this liquidity pool because it's a psychological level where we can see some manipulation, the same as we did here, okay? That could happen now in the opposite direction at 50,000. So that's what I mean. You have to be very careful with your entries, all right? Clear entry, clear invalidation. If your entry trigger doesn't happen as you wanted, then forget about it, okay? That's the way to trade, at least in my opinion. Now, I would like to take you to the liquidation levels of high block capital and the liquidation heat map and try to make some sense of what is currently going on there. Liquidation levels. Let's have a look. Delta, I imagine, is back to zero. $3 billion worth of short liquidations. Again, take this amount and this number with a pinch of salt because it's not real, okay? There are not $3 billion worth of short liquidations. Use it as a reference. I'm using the max liquidity setting, so this number is not real, don't worry. So to me, $3 billion is basically neutral, okay, in this setting. That's basically neutral and not much interest. I think that this number could be interesting if it's when it's between 20 and 30 billion. That's when it gets interesting, okay? But 3 billion, nah, that's neutral to me. Now, what I find quite interesting about the liquidation levels is that it's true that I can see some spikes in the right of liquidations at 50,000. You can check here, 127 million worth of short liquidations at 50,073. That's interesting. But I can see the same to the upside and even more liquidations. I have one here, look, 52,700. Another one here, this quite high up. There, 54,000. This one, 53,369. I mean, you have to be careful because there is quite a lot of liquidity to the upside. And if we go into the liquidation heat map, I imagine that there is going to show up some liquidity around those levels too. There you go. It's not very clear at the moment because it's true that what I see in the chart is there is a lot of liquidity between 50,500 and 50,000. If we enter the zone of 50,500, I imagine that will drop directly to 50,000. So 50,000 is the number that I'm going to pay attention to, not this one here. And it's true that there is a lot of liquidity there. And if you notice, guys, try to ignore what happens here. Look, try to watch until here, okay? What do you see here, guys? At this point, you already see that there is some liquidity there at 50,000 and 50,400, right? You see that there is some liquidity there, but I want you to look at something here. What happens later is, to me, the most interesting part. This spike here at 50,500. Look at that spike. Do you see what it does? That spike is not attacking the area that we knew already. Look at this, please. This spike is not attacking the area that we could already see from this level, because you already can see that at 50,400 and 50,050 there is a lot of liquidity, and it doesn't go all the way there. It stops at 50,550, okay? It stops $100 before getting there, and then it bounces. Why? Well, usually the only way to describe this is a room for liquidity. A room for liquidity in terms that price doesn't attack these areas and leaves them untouched on purpose, so the liquidity stays there, but it doesn't only stay there, it actually increases, because then when the market maker pushes price back up, that's the room for liquidity, because there are going to be some retail traders that are going to think, okay, price is going up, I'm going to open a long, because maybe we get back inside the range, and then price can go to the top of the range again. Those traders are going to be opening longs, and if they are using high leverage, the liquidations are going to accumulate in these areas. That's why you see this yellow bar and this yellow bar here increasing. Now, I want you to think about something, okay? Do this kind of exercise. When was it more worth it for the market maker to attack these numbers? 50,400 and 50,000. When is it more worth it to do this, to go to these levels? Now or back here? 20 February, 5:35 UTC time. Well, to me, the answer is clear. Now there should be more intention, and it's more worth it to attack these numbers because the liquidity around these levels have increased a lot, because this week here didn't go there, and then from there price went up when a lot of retail traders jumped on the boat on their longs, and their liquidations stacked and accumulated around this level. So to me, this looks like a run for liquidity, and it's telling me that it's very possible that we go all the way to 50,000 when we have that liquidity pool, which matches with the liquidation levels. It's not an accident. That's what liquidity pools are. And also 50,000 is a psychological level. So that's all I have to say about this chart. It's supporting the idea of 50,000. Yes, as you can say, yes, but we see also a yellow bar at 53,150. All right, that's true. We could go there. Why not? But understanding the psychology of this move here, that it was likely a room for liquidity, that is telling me that at this exact point, they knew what they were doing. They knew that they were going to push price up, so the retail trader goes long, the liquidity increases here, and then they can drop price all the way to 50,000. So to me, it makes more sense that the market maker was already planning from yesterday to do all this move to then hit this amount of liquidations that was going to be a lot bigger. All right, so to me, it would make more sense 50,000 first, and then we'll see what happens. If we start to see the market maker building longs in that area, then we can look at 53,150. All right, that's what I think. I think that also, not to say that we are closer to these levels to the downside. Okay, so it's more likely that we go first to 50,000 instead of 53,000. That is what I think, but the chart has to support that theory, and that's why we're looking at the 4-hour 50 MA. I want to explain you this well, because you have to look beyond the yellow bars. All right, many traders that are looking at these maps now, because they're getting popular, these liquidation heat maps, they still don't know how to read them, and they see this chart and they say, okay, yellow bars, I see a yellow bar of 50,000 and a yellow bar of 53,000, but it's not about the yellow bars. It's about the movement around those yellow bars and how they get more liquidity in them. All right, and this kind of moves, this kind of potential rooms for liquidity, is why it makes more sense. Okay, that's what the logic is. You have to try to find some logic into your charts. You know, they are just charts, okay, not projections. So be very careful. We're gonna go back into the chart right now. I'm going to share my final thoughts about this and how I'm gonna trade this, but I think here we must be patient. Let's have a very quick look at the order book before going into the chart, and to be honest, it's looking quite messy. I mean, you have some red bars to the upside, also to the downside, so it's not very clear where they want to get to. You don't really know what the target is, right? So it's not telling us much information. Now, what I can see though is this red bar below the current price value, that if you notice, it was previously at 50,700, but then there is a cut in the graph and it escalates $100 higher. Can you see the red bar going from 50,700 to 50,800 now? Okay, what does this mean? In my opinion, it means two things. It can be one of those two things. The first thing is that if we continue seeing this red bar escalating higher, you have to try to imagine it as a trailer stop loss, that it's increasing, it's going up as price goes up. So that's going to tell you that the most likely outcome is that price continues going up. The other alternative is that they might get ready to do some spoofing, okay? And you are going to notice with this is that this red bar is quite volatile in the way that they are moving it from one price to the next. And that means that perhaps if price is going to go now towards that level, that will be a $500 drop from here. But if we get that drop and we are about to touch that red bar, you have to be very careful, because they might do a spoofing with that red bar. I mean, spoofing is when the price is about to touch all those orders, and right before it happens, a few minutes before it happens, that red bar disappears out of the chart, and then price drops lower. Why do they do that? Because they know that some traders are trading based on the order book, and they think that that could be a buy wall. An area in the chart, a level in the chart where there are many buy orders from the retail trader, and if price goes all the way there and hits the area, then they're going to see a big bounce. So the retail trader places their orders, the buy orders, in that red bar. Now, if those orders are from the market maker, and that would explain why it's moving like that, then the market maker could spoof in those orders. They could make them disappear right before hitting them, making the retail trader believe or tricking them that they were going to hit that zone to bounce, but what they do instead is removing all those orders right before, and then price continues dropping. All right, so be very careful with it. You want to see the red bar continue moving higher, maybe into 51,000, and then yes, that can tell you that price is willing to continue going higher. Now, if price goes to that red bar, I would be very cautious that they are not going to do some kind of spoofing there. All right, so that's what I mean. Just because you see a red bar doesn't mean that it's a buy wall. That's something that you have to try to understand, okay? So that's my read of the other book. Let's go to the chart, because this video is gonna get too long otherwise. Back to the chart. I'm gonna be very quickly, I'm gonna wrap this up. So I'm gonna mark the two main interest levels in the chart. The first one is gonna be this 50,000 level. It's a psychological level. Also, you can see that it's part of this liquidity pool, almost the 100% retrace. It was also an area where we saw previously some manipulation. So you have to keep an eye on this level. Now, of course, the other level would be, and to be the main level where everything is playing out, is the 4-hour 50 MA, and then the range size. So, what they want to say with this? Well, you have a short scenario that to me is the scenario that I would feel most comfortable trading, because I know that if it happens, then I'm gonna have a lot of conviction that it's gonna play out, and that would be a drop below the 4-hour 50 MA. Then I want to see two candlesticks testing it as resistance, so that would be 1 and then 2, and then that's when I would enter short after this candlestick closes, testing it as resistance and closing below it, because from the third candles onwards, the risk to the downside would increase very fast, okay? So maybe you can see something like this and a drop to 50,000. That would be the setup that I would feel more conviction with. But for that, I need first these two candlesticks testing it as resistance, and one candlestick first closing below that level. So that would require 3-4 hours candlesticks, so that would be 12 hours. That would require 12 hours of setup, okay? Perhaps during the Asian session, that could match, all right? Now, the other is the longest scenario. And for the longest scenario, the level that I like is 53,150, because that's where we saw those liquidation levels in the heat map, okay? And for that to happen then, what I want to see is pretty much what I'm seeing in the chart. I can see the 4-hour 50 MA being the current support, and it's showing up like a very strong support. I would like to see the 4-hour 50 MA continue creeping upwards until the range highs, some more consolidation here, then you have here double support, and that would be telling me, okay, you know what, we've been testing that support, we're not breaking below it, so we could see some continuation up and hit those liquidations. After that, well, we'll have to see the reaction from the level, okay? Because if we start to see some consolidation around this level, that will be telling you to favor upside. However, this could be a 3 taps pattern. 1, 2, 3, drop, right? But for that, first we need to see the reaction of the price action around that level. If we see consolidation, we're gonna favor higher prices. If we see a drop back inside the range highs like this, then we'll enter a short here. All right, so that's what I'm gonna play out. The main thing is to have patience, okay? I know my setups, I know what I'm looking for, so I just have to be patient. And today is Thursday. That means that I have 2 more trading days, today and tomorrow. It seems that today I'm not gonna be on a trade. Perhaps during the Asian session, yes, if I see that move here, okay? If not, I'll just be patient and wait and see what happens tomorrow. If tomorrow the 4-hour 50 MA is at the same level as the range lows, and we are testing a support, then I might open a long towards that level. All right, so we're gonna analyze this again tomorrow, but I want you to be patient. Be patient, like our friend Henry. Henry was patient and he didn't lose money. So the impatient traders that open shorts here, they got stopped out. They end up losing money, okay? So patience is very important. Be like Henry, guys. Anyway, thank you, Henry, and thank you all for watching. I'll see you soon.